Alright, what's going on, guys? I'm back with a new video. So today obviously we're gonna go over what happened this week. In total I had about 2 or 3 trades, which is not a lot, but the market was extremely thin. At least the past couple of days. So it wasn't the best trading conditions, but there were some pretty good trades. At least one in the beginning of this week, which I'm gonna go over right now. So essentially, as you can see, what we did this week is that we trended the first time, and then we just balanced for 3 days. Eventually, value area shifted lower, but this was New Year's Eve, and there was absolutely no activity here to be traded. So yeah. So if we just go over the first day, so here's the recap of that day. However, okay, yeah, that's fine. So essentially, we were already one time framing for at least 3 sessions, as you can see, which was a pretty, it was pretty good. We had balance down there, then we one time framed up, and then again. However, once I actually got to this profile, I knew that the one time framing was most likely not over. So I'm gonna show you guys why. Well, first of all, value was shifting higher, right? But the most important thing that actually was giving us signs that the market could still one time frame higher. I'm sorry, was this all-time high, which was auctioned during the overnight session. So when the all-time high is auctioned during the overnight session, it is most likely done by weaker hands. Therefore, the auction is not extremely strong. It has a much lower probability of holding compared to, say, a regular trading hours ATH. So in this case, right now, for example, this is a regular trading hours ATH, so normal excess at the high. If we take a look, there you go. So this will have much higher probabilities of holding than essentially an all-time high that is auctioned during the overnight session. So if I just put on the overnight session, you'll be able to see it, I believe. So if we just go over here, there you go. So there you go. This was the all-time high that was auctioned during the overnight session, and therefore has much lower probabilities of holding. So this is one of the main factors going into this day. Aside from that, if I take a look at the debrief, there wasn't much more. We could also say that obviously these low volume areas haven't been revisited yet. Weren't revisited, but still haven't been. So that's pretty good for initiative buyers, because essentially buyers would either want to defend these levels or essentially not return to them, because these levels essentially infer bullish change in confidence. So you most likely not want to return to these levels. Alright, so this was kind of the only extremely good setup of the week. As you can see, there was nothing special about it. My goal was essentially, my first target was to repair this all-time high here, which was auctioned during the overnight. But obviously, you don't want to sell. You want to respect initiative rules. You only sell once obviously responsive participants jump into the market and confirm that essentially we have found opposing liquidity. Okay, so that was that. If we take a look at the rest of the week, there was something pretty interesting that happened on Tuesday. There's something pretty interesting, so I'll just go over it right now. So I didn't actually catch this this long, and I'll show you guys why. Alright. So obviously these are the current references. So don't really pay attention to them. But can I? Okay, no, never mind. So obviously at this point going Tuesday, I'll just pull up the plan. It'll be easier. going essentially into Tuesday. We were already one time premium for 4 sessions actually. If we take a look here, we had this session, this session, this session, and obviously this session right there. So we were already one time premium for 4 sessions. So the market may have gone too long. However, we didn't have any indication of proper weakness for us to actually decide to go short. The only sign of weakness we had was a bit of this elongation here. Let's say this thinness with some anomalies here. As you can see, L period, which were eventually filled, but there were a couple of anomalies. Also, this small low volume area. All of these are anomalies and show poor structure, but it's nothing. There's nothing extremely significant towards the downside on this market yet. So that was my mindset going to into Tuesday. Also, I knew that again, all-time high was most likely. All-time high was also auctioned during the extended hours. So if we look at that, there you go. So this was the overnight session, and as you can see, it auctioned higher. So I wouldn't really say this is fully long or fully short. This is kind of both. We have a kind of a double distribution here without having a low volume area. We can have a double distribution. So, but there you go. This was the all-time high that was auctioned during the extended hour session. So if I remove that, all right. So as you can see here, essentially my first expectation on this was okay. Well, we're opening above the previous range, so that means there's natural positioning, essentially long natural positioning in the market. But also there's obviously volatility because the market is fully imbalanced as we gap above. So the market eventually filled the gap. Alright, this is a pretty common setup. If the smaller the gap, usually the faster it'll fill, right? Just in terms of math, if you have much higher probabilities of essentially covering a distance such as this one than a distance like that, you know. But it's not super relevant in this case. But there you go, it filled the gap. And then what I essentially observed is that okay, I would expect this to actually repair the all-time high, which was around this level, and it actually did by about like 2 ticks, which is fine. It's valid. And then we didn't really actually do much for the rest of the day. What we could have observed, if we take a look at this, is that essentially, as you can see here, B period came 1 tick from the overnight high, which is very mechanical. Also, it doesn't. I don't think it shows here because this is the final day, obviously. But I mean the final profile of the underlying session. But essentially, we had a 6x6 developing POC. By the time we got to F4 G period, about G period, we had a pretty prominent POC. Value area was I should have wrote your developing higher because essentially, well, shifting in the end, yeah, but developing higher, you always want to look where value is developing. So essentially, if you're trading market profile, you always want to know where value is, because we are a value-based trader. We're not, I mean, if you're trading market profile, you're a value-based trader. You're not a price trader. So price is important, but value is way more important, because you want to know what participants are actually deeming fair value. Okay, so knowing that, we have prominent POC, value developing higher, and we had this kind of weak B high there off the overnight high. So essentially, as you can see, F and then G period started one time framing down, and what I was looking for the entire day, but I actually left my computer. What I wanted when I noticed all of this balance here, I knew that eventually we were probably gonna extend on either direction. So if it was gonna be towards the downside, I either wanted to see some sort of tempo loss around the spike base, or some tempo loss around the afternoon pullback low. But what actually bothered me about this, looking back at it, is that Usually I want these tempo losses to be relatively I mean a bit, a bit closer to the references I want to put my stop at. So in this case it was like about 3 points from the low, which is valid for me, but I would have preferred a bit lower. However, I'm trying to actually find a solution for this, and I kind of found one, but I'm still not extremely sure if I would have taken the trade at this exact level or not. But there you go. The idea was there. So I'll talk about more about the method I'm trying to develop later. But yeah, there you go. So essentially, it was a simple probability. I mean, it's not simple, but I mean, it was a probability trade. Essentially, these trades are the cleanest if they work. You just gotta think in terms of probabilities, but at the same time, you don't want to invent trades. In this case, we had the afternoon pullback low. The afternoon pullback low is probably one of my favorite references. I mean, to be honest, like if you think about market profile traders, the afternoon pullback low is an extremely important reference. Why? Because it essentially determines change rate, and it's the same for the spike base. It's very commonly used because it essentially determines change. Um, but yeah, there you go. So this was for Tuesday, and then I'll just see if I had anything else. So if we take a look at Wednesday was not very impressive. So at this point in the week, like the whole reason I'm up is because of Monday, which is the trend day, which is pretty good. It was like let me see it was like ooh like 40 points, 45 points. Um, then let's see. I'll just check if I had anything else because I believe I had a break-even trade on the Russell. Let me see. Yeah, there you go. So in this case, I was actually looking to place a probability trade, essentially on the reversal on Russell. But what I did wrong on this is that, I mean, it didn't really do wrong because I knew I was missing a couple of factors, but so I placed my stop at even. But essentially, what I did is that my whole plan with this is that I know that we were gonna open within the spike base, right? So if you open within the spike base, you're most likely expecting 2 time framing. But then hold on, let me see. Okay, no. Yeah, I just want to zoom. Okay, there you go. So, so you're expecting 2 time framing, right? But the thing I wanted in my plan was, as you can see here, I wrote, I wanted a weak low, somehow a weak low around this level, but before the spike base, and I actually didn't get one, which is the whole reason the trade got break even. Essentially because if I got a weak low here, this would confirm essentially that the initial move was simply weak buyers, weaker hand buyers, just moving the market, right? But I didn't get it, and on top of that, the reference was actually taken out by a bit, by 4 ticks already. So that's not that's a lot of imperfections, as well as the rejection below the spike base, which is telling us that essentially sellers are not willing to provide change towards the market, which they eventually did, but not in a period. So yeah, there you go. This is just I would say a small mistake. I should have respected the weak low thing, but yeah, I was aware of that and just got to break even, so that's fine. And then I think I didn't do anything on didn't do anything on the 29th, neither third. I mean, these days it was very hard to trade. I mean, in my opinion, you got B. So the thing I did on again on the 29th, it was kind of the same concept as the 28th. When I saw this balance here, and all of these weak references, because if you take a look at this, B period actually came like 2 ticks from the previous low of day, which is a mechanical reference. And I believe we had another one. Oh yeah, I mean I can't remember right now, but I think it was C or something that was off the ON low or something similar. So what I just wanted is to see some sort of rejection in this area to take a short. Why? Because essentially POC was extremely prominent. We had a weak low, a double weak low. We were balancing. So if we look at balance rules, essentially, if I take a look at the Discord, take a look at the Discord. Again, balance rules are very important. So, alright, so okay, there you go. So if we stay within balance, essentially we cut off activity at the extremes. No new business is accepted. So this is kind of the first scenario where we just stay within the boundaries of balance. Also, feel free to join the Discord if you're not already in. It's free. So there you go. So eventually my plan happened, but it happened in end period, and I don't like trading end period. Usually end period will simply be liquidation of weak positioning, either weak buyers or sellers getting trapped and just moving, just essentially liquidating before the EOD, because most of them will not have margin to hold these futures overnight. So this is why, for example, in trend days we get that afternoon pullback low. I mean, yeah, at least in M period, the M period pullback low is usually just weaker participants liquidating their position before the market actually closes, because they're not able to provide the margin requirements for their underlying contract. So okay, so there you go. And then we had Thursday. Thursday was absolutely it was absolutely not interesting. We didn't do literally anything. We just missed the perfect POC by like one period, which was M. So we had a 12 wide here. As you can see, all the volume is being traded here. All the prominent with this prominent POC. But eventually M period somehow. I mean, not somehow. It's relatively expected in these type of days. But yeah, M period essentially went out with a spike probe, with a price probe, whatever you want to call it, and then obviously with a failed POC. So going into yesterday, I was really happy because I was finally getting something that actually looked decent compared to these past few days. I was really happy because we could actually get a decent setup out of this. So what did I expect on this? And I think in the end, I mean, I'll show you what happened, but yeah. So if we go over the plan, debrief. Right. If we go over the plan, which is this one, we go over this. So I'll just show you on the chart. It's easier. So value was essentially shifting higher. Participants were accepting higher prices as fair value. We had a failed POC. So as we talked about in the last video, failed POCs are extremely valuable. Why? Because essentially it tells us that all the value is here, and that essentially all of these people that were short here are short in the whole. So essentially they're very vulnerable. I mean, most likely vulnerable for liquidation if we find acceptance back within this spike base. So essentially this POC, not only is it failed, but it's also prominent. It's kind of 12 wide, which makes it extremely difficult for us to successfully diverge away from this POC. So yeah, there's a very high probability of a revisit of this POC. Also, we had a couple of anomalies here. M period, I call them SO anomalies. So essentially, these are pretty powerful. They just essentially show emotion, right? Emotion from participants. However, the most important destination the first destination I have for the upside was this spike base. So when you have a spike, you have obviously spike rules. I believe I talked about them in the last video. I'll just go over them real quick, but they're very important. So that's not the same thing. Okay, so I'll just draw them real quick. So again, you have your spike. You have your spike. You have your base, and in this case, I'll just go over today's setup. If we opened above, I mean in this case below, with the spike like that, we open below. So if we open below, this is relatively high confidence for sellers. And why is that? Well, this actually shows us that initiative is not over. So all of the initiative that went through in this M period spike there is most likely not over and has odds of continuing. However, in this case, the gap was extremely small. It was like 3, 2, or 4, whatever, 2 ticks or something, which is extremely small. And as I said, the smaller your gap is, the most likely it's gonna fail. So that was kind of I wasn't really worrying about this I guess this the fact that this was pretty much better for sellers to open below the spike. Ideally, I would have preferred to open inside of the spike and then just get a trade off the low here. I mean, close to the low, but it didn't happen. The main problem with this I kind of underestimated two things with this. The first one is that essentially our overnight inventory was fully short. So if I just activate it, there you go. Okay, there you go. So the overnight inventory is fully short below settlement. So this means that we have about a 70-75% chance of getting essentially counter auction to overnight inventory. So this is what happened in A period. But the thing is that with all of these upside references and the fact that if we found acceptance back within balance, the destination becomes the high. To me, it was a valid long here, with considering the fact that I was accepting the risk of this being a simple overnight inventory repair. However, what I did wrong was not taking long here, because as you can see, it worked out pretty well for the at least for the beginning of the session. It worked out pretty well. But what I did wrong here is that even though I knew this may be an overnight session, I just waited to take like a few points in profit. I didn't take my full profit at about like 8 points, which is not a lot, but I should have taken it at the high. And why is that? Well, I just realized, I mean, I didn't just realize, but I thought about it. If I knew that this move had a chance of being a simple repair overnight inventory, well, at any sign of essentially weakness from buyers, that we essentially telling us that let's say most likely we're not getting any more initiative, which actually happened. If we look at this, if we look at the chart, there you go. So we were kind of stalling here around the high, which is not good if you have the probability of being a simple repair. So I should have just scaled out my entire position here, scale that out a bit lower, which is fine. But yeah, I mean, I still consider this as a break even. Doesn't matter, it's like a few points. But yeah, it's not like nothing too important. Also, what I think came into this is that I think I kind of underestimated the fact that this was New Year's Eve and there was absolutely no volume, and it kind of proved my point, because then it just balanced for the entire day, and we went out with what is this, a 9 wide or a 10 wide POC, which kind of proves my point, but no, even higher. Yeah, but it's like an 11 wide POC. So yeah, just I should have scaled out. I guess I should have taken kind of a more scalp mentality going into yesterday, because we were on New Year's Eve. Volume's pretty low, but yeah, it's fine, you know. This week is, I mean, even though there were not, again, like, this to me is like the importance of trading less, but essentially capitalizing on bigger opportunities. So this week I had like 3 trades or something, and I still finished pretty much in the green because of this first day here. So just essentially this made the whole week, and yeah, it's obviously enough points, you know, 45 points plus a couple here, so that's fine. Also, I just want to talk about the references I posted. If you go into references, and then I just posted the references for Monday. So if I remember correctly, I'm not sure, but I think I posted a video a while ago with a pretty big back test I did. I was just like I was casually back testing, and then I went over. I believe I don't know why this isn't charging, but I went over the 1st of January of last year, or something like that, and essentially it was a massive. There was essentially a massive move, like 100 points in the S&P or something. So I mean, I don't know if that was related to news or something, but let's hope it happens again. Who knows? But either way, let me just close that. So either way, if we take a look at this, essentially by Ampere just like confirmed even further the fact that we have a high probability of revisiting here. And why is that? Well, essentially, as you can see here, if we zoom in on Ampere, it's a poor high. It's a poor high, essentially 1 TPO of excess at the extreme, meaning that the auction is not complete, and the market will most likely get attracted by it because it will want to replace it with a regular trading hours excess, right? Basic theory. So this is kind of the thing, but aside from that, value is shifting lower, and the close was not extremely strong, so that's not really great, but yeah, that's fine. We'll just see going into Monday if we get acceptance back to the within this bounce, we manage to repair this this poor high here. Aside from that, there's not much to say. Yep. So I hope you guys enjoyed this video. Let me know what other types of videos you want me to make. I'll definitely find another variety of videos aside from recaps. Don't forget to join the Discord, obviously. I don't know why that channel isn't working, but there you go. Feel free to join the Discord. I post some pretty good stuff in here. So yeah, I hope you guys enjoyed the video. Link in the description for the Discord, and yeah, I'll see you guys in the next video.